Welcome to Section 2 of the training. This section is Candlesticks 101. We've already mentioned our use of candlesticks in our trading methodology. Some traders have spent years studying candlesticks, and there is a lot you can learn about them. However, to trade the times method effectively, we just need to know some basic information about candlesticks and their formation. So we'll call this section Candlesticks 101 because we just need a basic introduction to candles and how to use them in our trading method. Remember the red and blue bars that we saw in the previous chart in Section 1? Let's study candlesticks a little closer and see why some are red and some are blue, and why some have no color at all. When we see a red candle, it simply means that the market traded down for that minute. It closed lower than the market opened. It's as simple as that. And the data feed software colors the body of the candle for us automatically. The colored part we call the body of the candle, the difference between the open and the close. You've probably already figured out that when a candlestick is blue, it means the market traded up from the opening price. So that means that the market closed higher than the market opened for that candle. So the body of the candle is automatically colored blue by the software. Actually, we really don't care much about the color of the candles except for the actual market entry. For signal structure, we're more concerned about the total trading range of the candles. The trading range is defined by the wicks and the tails that we see at the top or bottom of some candles. In this example, the wick at the top of the blue candle shows that the candle was actually a taller blue candle at some point in its 60-second formation. The tail at the bottom shows that it was a small red candle when it was trading below the opening price. The red candle shows us that it was a small blue candle when it formed its wick at the top, and it was a larger red candle when the tail formed at the bottom. Sometimes candlesticks form that end up having no color. These are called doji candles, a Japanese word meaning same price. And that's what exactly happens. The candle opens and closes at the same price. So there's no candle body to color at all. So what we see is something resembling the cross in this example. A doji candle may also form in the shape of a T, or it may be an upside down T, or it could even be a dash if price. To get a better understanding of candlesticks and how they form, let's look at a chart and see exactly what happens for a minute or two. Let's watch a candle form. Here it does so in usual fashion by forming a dash. This is the opening price, the price that the candle began trading at. Since price hasn't moved yet, there's no color to this candle yet. It's a doji candle. Now we see the candle is trading down a bit, below the opening price, so the candle is automatically colored red. A few seconds later, it trades back up to the opening price, and it becomes a doji again. Now we see it trading up, above the opening price, where it becomes a blue candle. Once again, a doji. Now, trading below the opening price again, the candle is red. Candles may change color often throughout the minute. Now we see it traded even lower, thus a larger red candle. Here it pulls back up a little and leaves the tail to mark its trading range. We can easily detect exactly how low price went during this minute. Finally, after trading for exactly 1 minute, the candle closes, and it starts forming a new candle when the new minute starts. You can set your watch when the new candles start. So far, this candle is trading above the opening price, and we can easily tell that by the color, blue. By now, you should have a good understanding of how candlesticks form and how they look during that 60-second formation period. Well, this is how candles form the highs and the lows that we see every few minutes as price oscillates up and down. By studying this chart, you can probably see how the market makes those trends, both up and down, as price climbs up several points and falls several points throughout the trading day. This concludes section 2 of our training. If any part of this section was not totally clear, then we suggest that you review this section again. If any questions still remain, then please write them down and we'll go over those questions in the online portion of your training. If you thoroughly understood this section, then you can proceed to section 3.